I guess during the COVID period, it snuck up on us. We never really realized there was a drought because we were more worried about surviving day to day and keeping safe and healthy. But actually the weather had started to change. And the rains have started. So obviously food prices will start to come down. Some of the commodities where we're importing, then obviously that's externally focused pricing. So we're a price taker, so we can't really, if we're importing maize, then that's a global price.
Right.
Oil prices have also come down. So I think as that starts to feed through, then hopefully inflation comes under control. Yeah.
When you talk about comes under control, the predictions are always there.
Yeah.
And sometimes you say we get ourselves, focused on something else and perhaps overlook the changes that are also happening. Like you rightfully put it, the climatic changes and everything. In all these predictions, what should a good government do? What should good economic drivers then be to make sure that even when we land in such spaces where, well, we say it's a global crisis, then we stay afloat until the next right space?
It's all about predictability in the end, because businesses need to invest and individuals also need to invest. So you need to have some certainty that tomorrow is going to be okay.
Yeah.
And I think that's the important thing. So I think as they start to get, and important things, for example, when I talk about certainty, let's look at the shilling, for example. So there's been a lot of conversation around the depreciation in the shilling, which isn't unusual for a country like us, which runs deficits. So it means your shilling has to depreciate just because you're importing or consuming more than you produce. It makes sense, But when we come to the issue of the interbank FX market, where, for example, we're unable to actually find out what the real price of the shilling against the dollar was, that is unpredictable, because you go one day to your bank and it's 133, you go the next day it's 145. It's very difficult to run a business. So, for example, if you have a container coming and you need to pay your charges, at what rate do you actually buy your dollars, and at what rate do you eventually price to your end consumer? And that's the problem with predictability. So I think a government really should try and make the environment as stable as possible. Obviously there are shocks, that's not impossible.
Right.
So I think if we get to a situation where you kind of know that tomorrow when you go to the bank, you'll be able to get your dollars, that's fine, which means you're not hoarding dollars. If you go to the petrol station, you'll be able to get fuel. If you go to the supermarket, you'll be able to get maize, you get your unga, get your vegetables, etc. And that the prices haven't jumped some crazy amount, because that doesn't make sense. So that's, I think, the main thing, and probably the biggest challenge for the government right now is trying to make people feel that tomorrow will be better. At least some certainty, not necessarily better, it could get worse.
Unless tomorrow is going to be, is
but
guaranteed.
Tomorrow is not, you're not going to fall out of bed and hit your head, you're going to get out and put your feet on the ground and move on with life.
Right.
I think that's the important thing.
That's really important. The capital market, what do you make of it in this situation that we're in right now?
Look, I think it certainly opens up a lot of opportunities. So, when things are bad, actually is probably the time to look at it. And the reason I say that is that the NSE is probably the cheapest it's ever been on the data that we have, which goes back 15 or so years. So actually there's a lot of value. Now, that's not to say that there's not going to be volatility, because the economic picture is a bit hazy. But, for example, if you're worried about inflation, look at stock like BAT Kenya, pays a double-digit dividend, pays out most of its income, if not all of it, in dividends. So it's a stable income. These are very interesting ones. If you look at the banks, if you look at Equity Bank, you look at KCB, they're all trading at multi-year lows on their multiples. So there are opportunities. Now, I'm not saying you're going to make money tomorrow. There's no certainty in that. But what you do know is that in 5 or so years' time, if you have a slightly longer time horizon, which I think we should have at this point, your investment, if timed well, will probably do reasonably well. So I think there are opportunities. I don't think it's all, it's not scary, but when you look at just the pricing, unless you think that the Kenyan economy is going to go the way of Sri Lanka, which is not, hopefully, then there are opportunities here.
All right. Yeah. Prediction and projections, very, very important, especially when you're talking about the economy. And so I don't know the timelines, perhaps, at a professional level, what would be the best timelines to, project and predict your situation economically so that you're not gotten flat-footed. And if you are, then at least, again, I repeat, you just manage to stay afloat until the next cycle where things look good.
Well, look, I think all of that comes down to your cash flow in the end, yeah? Because you all have needs. You have school fees to pay at certain points. You have maybe your car insurance, your mortgage, etc. Depending on what your outflows are.
Yeah.
So in the end, it's a question of how much you want to put aside and how much is for a rainy fund, yeah? Because we all have surprises that we cannot anticipate. So, you know, I just think it's just basically put pen to paper, just jot your incomings, what's your salary, what's your income from your shamba, etc., and what are your outgoings and how frequent are they, and then you say, well, this month I can put aside that, and then try and do something interesting with it, but never put it all in one place. So I think stock market is certainly an interesting place because there's value there, but you also need to diversify yourself. I wouldn't say that put all your eggs in one basket, as we say. Yeah. So I think it's really down to personal circumstances, but it's good habits. You know, it's good to put something aside. We all know that. You know, there's always a time when you need something. The beauty of stock market investments is actually liquidity, i.e., if you sell today, in 3 days you get your money. Now, there's no property that you can sell.
I guarantee you that.
Well, yeah. Also, you know, there are going to be issues. There are going to be legal costs. There are going to be some delay at the Ministry of Lands. There's always something. Yeah. It's just human nature and just the way it is. Yeah. But if you buy 100 shares of Safaricom today, and in a month's time you need to sell those, then you just basically, if it's like for example, my institution, EFG Hermes, you just use your app, sell your 100 shares, and within 3 days the money is remitted to your account, and you do whatever you need to do. So there's certainty in the return of that investment, as opposed to the uncertainty of timelines. How long will it take to sell my land? Is there a buyer for my land? Is the title deed clean, for example? You know, a lot of big questions. Was I conned before? Does someone else claim it? With a stock, there's no issue. It's yours.
All right, so that is quite an interesting bit, and we are going to go to understanding what it is that your institution does. But before then, perhaps we just look at one of the groups or cadres that sit within the drivers of the economy across, and that then would be the retail investors.
Yes.
What would they need to do at such a point? And once again, we're saying that whatever is happening in the country is not unique to us. It cuts across. That is from a microeconomic perspective, to make sure that, you know, in the next 12 months, then, you know, they have done right predictions and they are at the right space.
Look, I think a retail investor is a very important part of the economy. Unfortunately for us, you know, we had a boom, I would say, probably when a lot of privatizations were in the market. So let's say back in 2005, thereabouts, 2007, perhaps 2009. And then after that, it really petered out. So I think what's very interesting is that clearly the odds are that the government is going to have to privatize institutions. It's probably going to have to use the Nairobi Securities Exchange to do part of those, if not all, but hopefully all. But what that does is starts to create excitement. You see, people want opportunity. People want to be told, this is a new company, this is interesting, this does that, it's in this sector, perhaps it's a part of the economy that has been impossible to invest in. I'll give you a great example. For example, look at if they ever privatized Kenya Pipeline, and suddenly you have a nice, stable asset that is moving fuel products from one part of the country to the other. It's a very predictable cash flow. And that's something that insurance companies would love, for example, because they have long-term liabilities. So I think when we look at that, for the retail investor, that's going to be a key catalyst. And I think also for retail investors, it's about having the right facilitation. And by that I mean the right type of access to the market, the right type of information. And, you know, and it's something we can talk about. That's something that we're trying to do, where we're building we have built a retail app where the onboarding is fully digital. You don't need to touch a piece of paper to open a brokerage account. You know, you fill it all in online, you take a picture of your ID, everything is done digitally, and then you get your account open, and you can fund it with as little as you want. You know, you could buy something like a Kenya Re, which trades at almost 1 shilling. So literally with 100 shillings, you can become a shareholder in Kenya Re. So, or Kenya Power. Or you can buy BAT at 400 odd shillings. It depends. So this is the important thing, and we see in our other markets, retail is important because what retail does, it adds dynamism. So institutional investors, so a pension fund or an asset manager is a more of a patient money. You know, they're thinking long term. Was retail for example, may have a sudden insurance claim to pay, or may have a sudden situation with a medical bill, so they need to raise money. So the frequency of going in and out is faster, which then creates a lot more activity, which creates a lot more excitement, creates a little more volatility. Volatility is not bad, so things moving up and down is good, because it creates opportunities to buy low and sell high. The worst thing you want is where it's just in the doldrums, it's flat. There's no activity because there's no opportunity for you to get involved, there's no opportunity for you to sell. So retail is very important. So I'm hopeful as the privatization agenda gets started, and we've seen this in the Middle East, for example. So the states started privatizing their entities, and then what you've started to see is a second wave where private companies, family businesses are now coming to the markets to raise capital because confidence has grown, activity has grown, and participation has grown. And it's always, usually in most situations, cheaper to raise money on the equity market than it is to take a loan.
Okay. All right. And most of the people say that you have to take a loan to survive in this world of business.
Well, debt is not bad. And that's the conversation we have with Kenya. Debt is good. It allows you to invest. The problem is when debt becomes too much. And that's unfortunately something you have very little control, because the market decides, or your banker decides when the debt is too much and says you need to pay it down.
I think someday we're going to have a conversation in relation to that, just what debt is good and which is this one that is bad. Well,
all debt is fine, because you can have your credit cards, that's debt. You can have your Fuliza, that's maybe facilitation. You're a trader and you need working capital. You can have your business, you have an overdraft because your cash flows are not matching. You maybe whoever you're selling to is paying you in 60 days or 90 days, but you need to pay your salaries every 30 days. So there's always a mismatch. So there's nothing wrong with that sort of debt. The question is when too much debt is too much, and that usually is most likely to do with your capacity to pay. How much, if you go take a loan, the bank will ask for your bank statements, and they probably will not give you a loan if your current debt payments are over a certain percentage of your income. And that's kind of the conversation around, can you actually afford it? Now, when the world was positive and interest rates were low in the US, then that conversation was kind of kicked down the road. Now interest rates are going up, so basically you have a situation where money is not free any longer, and someone sitting who maybe was earning 0 in their savings account now can earn 4 or 5% in their savings account. So they're a little more, why do I need to invest in this risky investment when I can just stay in US dollars, in US bonds? So that's the conversation, and then that changes the matrix, because suddenly you're like, this is now a risky investment. Why should I lend to it? And then that's probably when you start getting the conversation around, this is too much debt.
This is too much debt. All right. Okay. So you mentioned something to do with stock markets and stock investments as perhaps a plus, in what it is that you invest in. And it's as though you read someone's mind, because they had asked at the moment which would be the best markets to invest in.
Well, sitting in Kenya, certainly I think the NSE is a very interesting place to look at now, just because it's very, very cheap. And I think most of your listeners and followers will probably be in a situation where they should be set up, or at least looking to invest in Kenya. I think when we talk about external markets, then the risks there are something that is very hard to judge. So, I think people can play those markets, and even we can help. So if they want to get a hold of us, we can potentially help them also do that as well. But that's riskier, because you're one step removed from the information. It's all about what's in the papers, what's the headline, what's driving the conversation. If you're sitting here investing in a tech company and you haven't followed what's going on, then you're always going to be one step behind everyone else, which means that you might be caught off guard. So when you might have made money, you might have been luck and the market was rising. But suddenly in a downturn, you are caught out. So I think suddenly you need to look close to home as a start, and then start to look at other things. Then, you look at equities, look at some fixed income instruments for sure, and then diversify from there as your confidence grows, I think.
Okay. So what it is that your own entity does?
So EFG Hermes is a stockbroker. We are the largest by market share on the NSE. So we help institutions and people basically trade and access the stock market.
Okay.
Now, we're part of a group, so we are very large in the Middle East. We have a presence in what we call frontier markets, so whether it's Kenya, Nigeria, Vietnam, Pakistan, etc. So actually, we're a platform to really access most of the world. But in Kenya, our bread and butter is that we help our clients invest in the market. We also have built a retail trading app, EFG Hermes One, which can be downloaded, and it's the only fully digital onboarding solution in the market right now.
Yeah.
So if someone wants to open a stock trading account, you just go there, download the app, fill in your details, as you would do with any other app. There's some regulatory information we need to have, so a photo of your ID, that's all done there, a selfie, which we take, and then, you know, in a few days' time or less, you'll have your account open, you have your CDC account, and then you can start fund the account with as little as you want. You know, sometimes people feel that the stock market is for the rich.
And the rich and the ones that understand, and I'll tell you that there's barely so much knowledge, you know, in relation to the stocks market. And most of the people will even be rich, but then again, because of fear of the unknown, zero knowledge, they would opt out.
But you know, I always think, just go to the supermarket and look at the things you like to buy.
Okay.
So let's take, for example, if you're a drinker, let's say, and you go and you decide, you know what, this gin from this company is really tasty and I see lots of people drinking it. Look at the back of the label, who's making it. If you see EABL, then you know that's EABL, you can buy that. Because you can see from what people are consuming. If you notice that the bars are fuller and you notice that people are smoking more, for example, then BAT is where to start. If you think, for example, Centum is an interesting example. You drive past Two Rivers and you see the big building coming up, you see the apartments coming up, or you're in Vipingo, you see the development they're putting up. That's Centum. You know, so my point is that it's not such a mystery, because you just have to look at what's around you. What are you consuming? What do you like? What do your friends like? What do your family like? And how can you participate in that investment? So you, for example, the papers are here. So you think both of them, the Daily Nation is listed, and also the Standard Group is also listed as well. So if you sit there and say, well, I see more people reading this brand,
that could be the deal,
then maybe that's the one I should look at. So the stock market allows you to access investments in other parts of the market that you as a personal individual are very hard to do. For example, there's no way you and I can start providing medical oxygen to a hospital. I mean, AER Hospital is just behind you. So, but if you think you want to do that, there's BOC and Carbacid, which are both listed. So the point is that the stock market looks mysterious, looks like you need to use a lot of money to do so, but you don't. You can take a view, you can say KPLC, really, I cannot deal with the power cuts, you know, so you don't buy that stock. You know, it's just very simple.
It's just as simple as that.
You know, and, but then
and perhaps, you know, from a point of view of someone who really does not understand, looks dicey, looks mysterious, and then also there's that fear of the security of your money and your investments and all that.
Well, okay, security first of all is paramount, because first of all, as we said, the stock when you buy is in your name. It sits at the CDSC. There's no way anyone can take it, because it literally is just a dematerialized, so a digital piece of a company, you know, and the ownership is clear, the transaction is clear, because when you buy, there's a trade, as we call it, it's a trade. Basically, the money moves hands from the buyer to whoever is sold, and the ownership of the stock also moves to you, and there's a complete digital register. So no one can ever say, that's not yours, you didn't buy it, because it's like someone, let's put it in layman's terms. It's like me sending you M-Pesa. There's a digital stamp. I get a confirmation I sent you. You get a confirmation I sent you the money. Safaricom knows. So a third party can't sit there and say, that's my money, because the transaction is verified. So the stock market is like that. So I think people shouldn't be worried that their money or their stocks can mysteriously disappear.
If this is for the rich, and I know you wanted to say something, if this is not for the rich, then at what level do you get to begin? You begin,
literally, so the way the market works is that there's a minimum lot order. So it's usually 100 shares. So depending on what stock it is, so each stock has a different price. So Safaricom, for example, is like 17 shillings. BAT is somewhere in the mid 400s. Things like Kenya Re and Kenya Power are low single digits. So
it's you to do due diligence and understand
due diligence, but I think the due diligence actually for retail really is all around us. It's the information that you see and what people tell you and what you read in the papers, because that information, you see, it's all public information. No one has, when people do illegal things on the stock market, it's because they have private information that people don't know. But everyone should be working on the same information. So what's in the papers, what's in the media, what's in the newsprint, what's on the billboards, what you see in the supermarket, what people tell you, what you see, that is your research. You know, and I don't think anyone can sit there and say, for example, that Microsoft is not a good company. You probably use Outlook for your emails, you're using Excel for your spreadsheets, you're using Word for typing up your things, you maybe have Bing for search. So you can sit there and you Google the same thing. Or Samsung, you can look around and say everyone has a Samsung phone. They must be good at making phones. So maybe that's a worthwhile investment. I'm talking in big brands, but you can do the same thing locally with the brands as well. Just look around. So it's not for the rich. I just feel perhaps it's just a, people feel intimidated, but I actually would throw it in a different way. Betting is done very well here. Betting is harder.
Interestingly.
Betting is harder. I mean, if someone is sitting in Nairobi betting on a horse race in the UK, what do they know about horses? They're doing it because they like betting.
It's a huge gamble.
You know, exactly.
It's way better on this one that you
exactly. Here, you know, if you're betting at Grand National, you can go there and you can see the horses. You can read you can see the mood. People can tell you stuff. If you're in Kenya, you have no idea of the mood. You have no idea of the insider information. But if you sat here and you're looking at this gin from EABL or this newspaper from Nation Media and you say this is a very good publication.
It's as clear as that.
Why? So that's where we need to demystify, and perhaps that's work for the industry to do, for us to do, and that's something we're very conscious of as an institution, as EFG Hermes. So we're working on that. So I think with our platform, eventually people will start getting more information, start getting, whether it's little videos, just to guide you and to demystify it all. It's not so mysterious. It looks scary, but betting on a horse race sitting in Nairobi is infinitely more scary, in my opinion.
So how do they get a hold of you, perhaps for more information? How do they check you out online?
So look, if you just look online for EFG Hermes Kenya, you'll be able to find our handles. So we're on Twitter, we're on Facebook as well, we're on the App Store and the Play Store as well, so you can find our products there. And, you know, contact us on email, pick up the phone, call us. We're friendly, we won't bite, and we're willing to listen to you and help. So we're very available.
All right. So if I don't take advantage of this time, I think 10 years down the line, I should perhaps blame myself for missing out on a very important
We'll wait to see your application this morning.
And I'm looking forward to try that out. I mean, after all, what's the worst that can happen? Mwathi Kilonzo, thank you so much for speaking to us. Managing Director, EFG Hermes. It was good having you.
Okay.
And certainly very important that you check them out. Remember, it is that moment of investing. And like he says, there are very many spaces of doing it. How you understand